Welcome to the Fiscal Physical Podcast. Join us each week as we sit down with the founder of Alchemy Wealth Management and author of Your Fiscal Physical, Ryan Nelson. Tune in to gain valuable insights and practical tips as we simplify complex financial concepts into digestible lessons. From budgeting to retirement planning, this podcast is your go-to resource for mastering financial literacy.
Welcome, everybody, to this week's episode of the Fiscal Physical Podcast. My name is Aaron. I am joined, as always, by Mr. Ryan Nelson, the founder of Alchemy Wealth Management. Ryan, how are you on this lovely day?
I'm doing well today. How are you doing?
I'm doing pretty solid, my man, and I hope all the listeners out there are doing well, too. You know, hopefully you guys are waiting with bated breath for this episode to drop, as it's going to be a good one. You ready to jump in, Ryan?
Absolutely. Let's do it.
All right. Excellent. So today we are going to be talking about entrepreneur essentials. As I was talking to Ryan before this episode, that's always a tough word for me to say. Entrepreneur, not essentials. I got that one down. But, you know, Ryan, these days you see many people who are starting their own business, or it gets thrown around a lot on social media, working for yourself, these different things. So I kind of wanted to have this, talk about this specific topic because, correct me if I'm wrong, you are a business owner, right?
Yeah, I am.
Okay,
Yeah.
Excellent. So
very astute.
I think that you got a leg up on me in that regard there. But we're going to dive in today about what really, being an entrepreneur actually means, what people should know, disclaimer, like what we're going to talk about a lot is going to be around the financial piece of it, because that's kind of what we're trying to improve, that financial literacy. But hopefully you guys can learn something from this. And, if you're thinking about starting your own business or working for yourself, kind of knowing what that actually is and knowing what the pros, cons, what could all go into that there. So, Ryan, I'll go ahead and turn it over to you, my man.
Yeah, let's do it. So, so what is an entrepreneur?
It's a great question, because that word gets thrown around a lot.
Yeah.
Oh, it's an entrepreneur. It's
what is it in your mind?
I feel like it's somebody who, I don't even know. I want to say like a self-employed person, like a business owner or somebody who works for themselves. But I don't actually know the official, definition, I suppose, but I'd be curious to learn.
Yeah, I don't know the official definition either. Let's take a look.
Sounds like it's a French word, I'll tell you that.
There you go. So a person who organizes and operates a business or businesses taking on greater than normal financial risk in order to do so.
Oh, okay.
So, perfect.
Cool.
So that's the official definition. Looks like that's from Oxford. But yeah, so to me, it's actually pretty close to that. So I guess I was pretty close. But yeah, so it's like starting a business and taking on the financial risk of doing so in exchange for the potential reward of doing so.
Sure.
Right. So it's sort of that risk and reward payoff. So as an entrepreneur, you own the business and you're taking more of the financial risk, get more of the financial reward. I don't know that that's either good or bad. I think some people are probably not cut out to be entrepreneurs. Other people are like seemingly more natural entrepreneurs, and more comfortable taking that risk and reaping those rewards. Whereas other people don't really care to reap the rewards and would prefer not to take the risk. Right. But to your point earlier, I think, let's focus more today on the financial side of this, not necessarily like branding. We can touch a little bit maybe on legal structure and stuff, but this would really be sort of the financial aspect of becoming an entrepreneur.
Perfect.
Yeah, let's do it. So one thing I would say is just a couple of like thoughts would be, as you start a business, you're trading that steady income for theoretical potential upside, hopefully, knock on wood, right? And autonomy. I think that's really what you get out of being an entrepreneur, is the upside of the business growth and autonomy. Mm-hmm. So if you were an employee of another business, that means somebody else was the entrepreneur. If Elon Musk is the entrepreneur and Tesla is the business, then there's lots of employees of Tesla. They don't have necessarily very much autonomy. They don't get to participate as much in the upside of the business, but they get a steady income.
Mm-hmm. Sure.
Elon Musk, you probably hear these crazy numbers where like Elon Musk's net worth will grow by, millions or billions of dollars in a single day.
Yeah.
That's him taking advantage. That's him both taking advantage of the upside, also taking, being a victim of the risk, right, of being an entrepreneur. And he has more autonomy. He seemingly has, gets his hands into whatever he wants
Absolutely.
to, right?
Yeah, I see it that way.
Because he has the autonomy to do so. So, again, if you were just to take him as an example of an entrepreneur, you can kind of envision the trade-offs there. One misconception I would say is, sometimes people think that like working for yourself or not having a boss can mean fewer hours or less stress.
Sure.
I don't know that that's necessarily true. I think especially at the beginning, most entrepreneurs probably work more hours and have more stress. Theoretically, it's possible probably to get to a place where you could maybe work less hours and have less stress. But I certainly wouldn't say that like all entrepreneurs in general work less hours and have less stress.
Yeah, I'd say that's one of the things you see like circulating on social media, TikTok, all these, like work for yourself, work 10 hours, work 15 hours a week,
Sure.
make, 100,000. And you're like, well, how long do I have to grind for like 60 hours to get this off the, 60, 80 hour weeks to actually get this off the ground, to be able to maybe work less? And,
Right. Yeah.
I feel like I don't want to, I'm sure it's probably out there, but it seems pretty rare. We've been, my wife and I, we've been reading this book on how Netflix got started.
Oh, okay.
And the amount of hours that those guys put into this company at the start are just incredible. Like you think about like, oh yeah, like you started your own business or you're an entrepreneur. You're probably, if it's going to be successful, you're probably working quite a bit in the at least in the first part of it. Maybe throughout the whole thing, who knows? But it's not always, hey, cool, I'm just not going to work anymore because I have my own business kind of thing.
Right. Yeah, exactly. It kind of reminds me of that quote we used a couple episodes ago, that founder of McDonald's, Ray Kroc, when he mentions being an overnight success. Yeah. And he's like, I was an overnight success after 30 years, right? Yeah. So definitely after grinding for 30 years, you can become an overnight success.
Absolutely.
And maybe you get less stress at that point. And so, but another interesting thing is, you kind of go from like having one boss that you report to like having every client in some way be your boss.
Sure.
Right.
Yeah.
So again, just another little interesting thought there. But yeah, so that's kind of like what entrepreneurship is in general, maybe. But let's dive a little more into the financial side of this.
Sounds good.
So some of the startups, like startup considerations. So if, for example, if a client was coming to me and asking, hey, I want to start a business XYZ, help prepare me to be in a position to start business XYZ, right? What I would say is we probably want to focus on having a bigger emergency fund. So in general, we would talk about emergency fund being between 3 and 6 months of spending. I think we had an episode on that back probably almost a year ago now on emergency funds. And again, rule of thumb, 3 to 6 months. If we're going into something like this where our income will be much more volatile and unknown, we probably might want a much larger emergency fund.
Sure.
So we may tweak that and say, instead of wanting 3 to 6 months of retirement fund or emergency funds, maybe we want something between 6 and 12 months of emergency funds. I know in my industry, there's sort of a well-known best practice that if you're going to start a financial planning firm, you should have 24 months of runway. So again, I'd say, think bigger the better. 6 to 12 months is probably ideal for a lot of businesses. Depending on the business, you might need something even bigger. So even up to, 2 years of emergency savings built up, which is a tall ask.
That's a lot. Yeah. Not everybody just has that money kind of lying around.
Right. Yeah. And obviously a lot of this has to do with what business you're going into, what experience you have. If you're working at a salon cutting hair and you go out and start your own salon and you're able to take all your clients with you, so you already have a full book of business, you may not miss a beat, right?
Right.
If you're starting a brand new company in a brand new industry and the sales cycle is 6 months long, you're not even going to get your first pay. If you find a client on day one, you're still not going to get paid for 6 months. You're going to want to it's going to be a lot longer runway or a lot sort of longer pre-revenue period. So that period before you start making revenue. So just think about kind of the business you're looking to go into and how much emergency savings you would need to sort of offset that pre-revenue period.
Smart.
And then the other thing I'd say to pay attention to is there's a lot of upfront costs. So there's legal costs potentially, like you might need a lawyer to read your current employment contract, set up a business entity for you. There's technology costs you're going to need, potential office space. There's insurance, right? So there's a lot of costs you would have up front. even if you're in that pre-revenue period, so not making any revenue,
Right.
you might still have all of these costs, right? So you may go from a business where you were an employee and the business was covering all these costs to now you having to cover them all, and you go from making a steady paycheck to no money for a period of time, right? So there can be quite a big financial burden there, and I'd say just be like aware of it, and as long as you plan accordingly, shouldn't be an issue, but definitely something to think about there.
Yeah, no, absolutely. Then those are some great call outs too of just thinking about the idea of potentially, I mean, everyone's going to be in a different situation, but going from a steady job to where you're, collecting a paycheck every 2 weeks or weekly, however you get paid, and then potentially not making money for 6 months,
Yeah.
something like that, or a year or something
Right.
like this to put in that investment and having that just, I guess, stress over the head, because who knows if it's going to be successful. You don't
Right.
specifically know. So I think that you called out originally, not everybody's maybe cut out to be an entrepreneur or being able to, because you have to handle that, not only that financial risk, but the stress that comes with it as well, too. And I
Right.
think that's a big piece of just life in general. Are you cut out
sure.
to handle that stress of the potential reward down the line?
For sure.
I don't know.
Yeah, right. Absolutely. Then another thing I would say is it's probably best to consult your attorney and your CPA or accountant on this stuff, but you're going to want to separate your business finances from your personal finances. So you shouldn't be running the business expenses and the business profits through your personal savings account, right? So you'd need to set that up and make sure you're sort of running your finances through the right sort of legal entity and bank accounts. And that changes from your taxes as well. If you're used to receiving a W-2 paycheck, your employer is probably withholding taxes from your paycheck
Sure.
and sending them to the government, right? When you're your now own employer, if you're not giving yourself a W-2 paycheck, nobody's withholding taxes.
Right.
And so now at the end of the year, all of a sudden you could find let's make our numbers really easy. If you made $100,000 and no taxes were withheld, well, you're going to owe taxes on $100,000, right? And the other thing with that is if you weren't paying them sort of in the right quarters throughout the year, the IRS may even look back at you and say, hey, not only did you not pay us, we're going to basically charge you a penalty for not paying us on time. Right?
Sure.
So definitely you'd want to work with your CPA and make sure that sort of your finances are running through the right accounts and you're paying your taxes appropriately. And it may be a less automated process than you're used to being a W-2 employee currently.
Yeah, I think about that, and you raise a great point of, when I file my taxes normally, it's very simple for myself and my wife. We have a couple W-2s, claim a couple of things, and bing, bang, boom. I can finish this in 15 minutes.
Sure.
Everything is just imports in now. They make it so easy.
Yeah.
Shout out TurboTax. Would love for you to be a sponsor.
Yeah.
But just in general, having to now think about all these different, you mentioned running the money or filtering the money through your business account specifically, just even that, I'm just oh yeah, I guess I just wouldn't put that into my checking account. I would have to start go through that specific account and just setting that up in general. I'm yeah, that's a lot of stuff to think about.
For sure. And then what's also interesting is there's what we sort of refer to in it. Yeah, most of us just call what's called the self-employment tax. And so you, for example, you're a W-2 employee, right? And so as a W-2 employee, you're paying, say, half of Social Security and your employer is paying half of the Social Security tax, right? And FICA. And so now as you're your own employee, you have to pay that all yourself. You're the owner, you're the employee, you're everything, right? So you have to pay that all yourself. So that's what we call the self-employment tax. That's 15.3%. So if you're normally in, say, a 22% tax bracket, you're going to pay your normal 22% tax. You, as we discussed in previous episodes, right? It's kind of a tiered system.
Exactly,
it's a progressive system, we call it. But either way, you're going to pay whatever you paid to the U.S. government in the form of normal sort of income tax. You're also going to pay this self-employment tax of an additional 15.3%. So that's an additional tax that a lot of people don't think of or consider when they're starting their own business. And most people sort of intuitively remember and know they have to pay income tax.
Yeah.
Oftentimes they're not thinking about this 15.3% tax, which adds up, right?
Yeah.
You think about your normal tax rate, you add another 15.3% tax on there. It adds up. And if you're trying to compare how much you would need to earn as a business owner to sort of break even compared to what you're making now, you might have to earn actually more than you think when you start taking all these variables into account.
No, I remember, I can't remember if it was in your book or somebody had mentioned like the self-employment tax before. I don't know. And I remember being like, oh, shoot, that's right. That's what my employer currently covers, I suppose, for that. So it was also just like, interesting. Like that, that adds a little pretty penny on an extra 15%. You're like, cool, I got to make a little bit more to offset that potentially.
Yeah, exactly. It adds up.
Yeah.
And then another thing, as far as business entity goes, I would say, again, another thing to chat with your CPA and your attorney about, but there'd be considerations of whether or not you want to operate as a sole proprietor or an LLC. Do you want to file your taxes as an S Corp? So there's different ways and entities you can set up. Probably too detailed to get into in this podcast, but certainly something you'd want to just think about and have in the back of your mind and consult the appropriate professionals to make sure you're addressing. Those types of conversations can have huge tax implications. And what I find is most people don't address those like early enough. Mm-hmm. So I would say just know and be aware that your legal entity is important and affects your taxes. And you should be talking to the right people about that. I don't know that we need to go any deeper into it today. Just be aware.
It seemed like one of the common themes throughout this is ensure that you either hire the right people or you consult with the right people before you just decide like, okay, cool, let's do this. And I would say probably nowadays the resources out there are probably much more numerous and more available, I would guess, versus, 20, 30 years ago or whatever. I mean, you could plug into ChatGPT, like, how do I start my own business? And it'll probably shoot you out a bunch of stuff, which is great. But at the same time, it's like, okay, cool, now I know potentially where to find this information and what's my specific situation and what's best for me. Mm-hmm. And I think you hit it right. Potentially an attorney, it's definitely a CPA, ensuring that you get all your ducks in a row like as early as possible. So down the road, you're like, oh shoot, I forgot to pay XYZ tax. Whoops, kind of thing. Like you don't get burned by something along those lines that potentially could jeopardize you.
Yep, exactly. And then the other thing I would say to just be aware of as an entrepreneur is like retirement benefits. It's kind of long-term focus. So right now, most W-2 employees, they're getting health insurance through their company. They're getting a 401k with a 401k match through a company. Again, just remember, once you are the owner and the employee, you're everything. Now you're responsible for paying for your own health insurance. If you are a one-person shop, you're not even going to be able to go get a group health insurance policy similar to what your employer has. You're going to have to just go to the marketplace and find like it's kind of a single person or family policy. And then same with like a 401k match. As the business owner, the cool thing is you get to set up whatever business retirement plan you want, and structure it however you want, which is nice. The negative side is the match that you're like paying yourself. It was your own money, right? It's coming from your own business, right? So, of course, there's trade-offs there, right? If you're participating in your businesses in your current company's 401k, that's kind of like free money, right? Mm-hmm. That you're getting. Once you start up your own 401k, it feels a lot less like free money. It feels like your own money, right? So benefits to being able to set up the plan you want, which is a huge planning benefit. Anytime I'm working with business owners, the fact that we can set up the exact right plan for them is a huge planning plus. So I love it. I love the opportunity to sit down with business owners and figure out what plan makes sense and get it implemented. And again, it's a huge benefit to them. But do also acknowledge that, now you're responsible for the 401k fees. You're responsible for the 401k match, all of that. You're responsible for providing the health insurance. Just something else to think of. And then maybe to put a bow on all of this, the other big benefit of being an entrepreneur is, your business becomes an asset as well. Right?
Oh, okay.
So in theory, if you own your business, you could theoretically potentially sell it in a year or 5 years or in 10 years, 40 years, right? And that's a benefit. It's a benefit that you're working towards. And so there's just a lot of probably pros and cons and trade-offs that we discussed throughout this, and none of them are inherently bad or inherently good. I think there's definitely some people who would be best served as being an entrepreneur. And then there's other people who, if they think about all these pros and cons, they say, I would feel a lot better not being an entrepreneur, being an employee, right? And I really don't believe either is better or worse. I think just different people will gravitate towards different solutions once they know the pros and cons.
Yeah, no, and I think that's a great call out of, you never know what's best for an individual, best for a family when it comes to those certain things and what your responsibilities are, what you're looking for. Some people might enjoy, like, cool, I have this safety net of like, I know my employer's covering XYZ versus being totally responsible for that overall.
Yeah, exactly.
Just out of curiosity, Ryan, this popped into my head now. Did you ever think you'd own your own business? Was that like something you grew up? Maybe I should say the personal section, but I asked it now,
sure.
so we're gonna roll with it.
I don't necessarily. Yeah, I can't think back like in like middle school or high school or something necessarily like having a goal to own my own business or thinking I would. I guess it was a slow, gradual process. So I didn't necessarily have like a long-term goal of accomplishing that. It just sort of different dominoes fell and it ended up making a lot of sense. And I think my personality is a good fit for it. But yeah, it wasn't necessarily a long-term goal.
Yeah. No, I was just curious if that was something that just purely curious, but awesome, man. That was a great breakdown there. Hopefully you guys kind of learned something specifically, maybe if nothing, you take away what an entrepreneur is, and maybe if it's something you've been, jonesing to explore or checking out, like definitely do your research on it and make sure it's, right for you. And if that's a place you want to go, more power to it without a doubt. But excellent. We'll go ahead and take a pause here. We'll be back on the other side of this, and everybody hang tight.
And now, to put the personal in personal finance.
Welcome, everybody, back to this side of the Fiscal Physical podcast. I'm still here with Ryan, and as always, we're going to do a little bit of a personal section here. So, Ryan, I have a question. When I was writing this down, I was curious to see what you were going to say to this one here. But what's the most spontaneous thing you have done in your life to date?
Yeah, I mean, it's hard. I don't know. I'm sure the most spontaneous thing I've done, I can't even think of, right?
Yeah.
But as I was thinking about this, I was like, I don't even really know what the definition of spontaneous is. So I was thinking like doing an Ironman, but I'm like, it's not really spontaneous. You spend like 6 months training. You don't just like, I'm going to do this. Yeah. Like, drive into Del Taco to get lunch. And then you're like, you know what? No, I'm going to keep driving. And I'm just going to go do an Ironman, right?
Yeah.
So it takes a lot of preparation, obviously, but maybe I'll say like signing up for the Ironman was like semi-spontaneous. So I mean, I looked up the actual definition of spontaneous, and it's like basically the result of a sudden inner impulse or inclination. So yeah, I don't even know if that is the most spontaneous, but I'll run with it.
Yeah.
What about you?
Honestly, it was funny when I wrote this down. I was like, I don't vision you, or I don't think you are, and I don't think I am super spontaneous. Like, I don't think we're just like, cool, let's just do this. Like, let's just go and do it. And so it was really hard for me to come up with something like this. I always think of these things and I'm like, oh shoot, I also have to answer this question too. So I think for myself was probably moving to Reno when I did, after I graduated college. Like I had a little bit of a job lined up down here, but I was like 6 months before I graduated, I was like, you know what, this is something I'm going to do. Let's commit to doing this. And once again, I had like 6 months to plan. Sure. And so I was able to, everything just kind of fell into place. But I remember like driving down here the first time, and I'm being like, holy smokes. Like I was leaving Idaho and entering Nevada, and I was like, did I do the right thing? Like, is this the right thing to do? Like, should I, is this just something I got a whim on, and is it going to be the right decision? And, 12 years later, I'm still here, so it might have been the right decision overall. But I was hoping you'd have something like that'd be like, oh yeah, I decided to, do this or whatever. And I was like, I don't think I've ever been that spontaneous specifically. Whether that's good or bad, I don't know. But it was just I was curious to see what you'd have, and I'm sure I'd love to puzzle the listeners to see if there's something you guys consider what is spontaneous to you, because I think that's a whole nother question on, cool, I'm spontaneously going to book this cruise for 6 months so I can pay for it. Like, all right, sounds good.
Yeah.
But awesome. Well, appreciate it, Ryan. As always, thank you for the time. Thanks everyone who's checking us out. Remember, these episodes drop every Tuesday. Please set your calendars, watches, whatever you use to make sure you don't miss these. And Ryan, I'll turn it over to you.
As always, stay the course.
Thank you for joining us for the Fiscal Physical Podcast. Until next time, happy listening. And as always, stay the course. If you have a question or topic suggestions, please email us at podcast@alchemywealth.com. If you enjoyed today's discussion, subscribe to the podcast to ensure you never miss an episode. And consider leaving us a rating and review on your favorite platform. This helps other listeners like you find the show. For more resources, you can visit Alchemy Wealth Management's website at www.alchemywealth.com or find your Fiscal Physical, the book, on Amazon. We'd be remiss if we didn't mention that personal finance is just that, personal. Please don't take anything we say as advice. The preceding content is for informational and entertainment purposes only. It's not an offer or a solicitation, nor should it be construed or relied upon for tax, legal, or investment advice. It doesn't consider your personal financial situation or objectives and may not be suitable for you.